Hello, gentlemen. How are you?
Very
Good.
good. Good to see you.
How's it going?
Good, good. It's going well. It's going well. How's everything with you guys? How did your rodeo go? Was that a successful event?
Yeah, we had a ball, man. The roundup, we do it in Fredericksburg. So kind of Texas wine country slash antiques, kind of the rustic charm. So
Ah,
we thought of years ago, it was like, why don't we have a community bank conference in an actual community rather than in downtown somewhere?
Yeah.
So that's a lot of fun, man. Yeah.
that's great. Well,
Yeah.
I'll try. I'd love to jump in next year. This year was really funny because literally, without exaggeration, we had talked about it, and then I ended up like parting ways with Pathword, right?
Yeah.
And I decided to do something I haven't done in the whole time in my career because I've been one build to the next build. I took like 3 months off and just relaxed.
Awesome.
So I knew what I was going to go do next, but my wife was like, "Hey, you haven't been home very much for the past, I don't know, decade and a half. Why don't you not go
Yeah.
travel around the world?" And I was like, that sounds great.
Yeah.
So
That's great,
Yeah.
man.
It's getting you back to work with a bitch, right?
Yeah, that's part of the
Yeah.
stuff.
yeah, I like the build, dude. I like taking on hard things. Like that. That's just me. I don't think I'll ever not work, but I definitely enjoyed semi-retirement. That was nice. So I definitely said I could see myself get to that place where I only work when I want to work.
Right.
The
Yeah.
rest of the time, I don't. That would be nice as quickly
Yeah.
as possible.
I
Yeah.
love it, man. Hey, why don't you take a minute and give just a quick intro of yourself, man? A little bit of background for anybody that doesn't know who you are, although they should, and they will after today.
Oh, that's nice. Yeah, Phil Ricky for those who don't know me. Um, I've been in the payment space for 2 decades. I've been a part of, as a young pup, got to join in on some really cool things. B of A, back when BAMS was first started, and KMS when that got its own FSP. I got to work with, Bob and Tony, the team at Heartland, and then I was part of a big build out at Clarent, which is now Explore Pay Technologies. And then I just spent 2 years really enjoying and getting a master's degree in all things bank law and compliance Pathword, as we're kind of envisioning what the next generation of what I call commercial banking is. I think a lot of people call fintech and all this stuff BaaS and all those fun names, but really it's commercial banking and the direction it's going. And now I'm the head of revenue for Moov. And Moov is, for those who don't know it, Move's building the infrastructure of what the next generation of that's going to look like. This is an infrastructure play that we will bring out to market. We already started, but we'll start bringing it out to market more formally this year. And it is going to be the full rails of seamless embedded finance, and not what we do today. So, yeah,
Love it. Yeah, and hanging out over there at Moov, getting to play with Wade Arnold, the mad scientist.
he's
Yeah.
great.
Always fun, right?
He's a
Shaved his
blast.
beard, so you probably wouldn't even recognize him right now, man. Yeah, he shaved his beard. He like
All
walked in.
right.
I don't even. Who are you?
That's
Yeah.
cool.
That's
Hey,
great.
talk a little bit, man. I love your view of the, let's call it commercial banking. And I always give sort of a similar backdrop that whether we're talking BaaS, embedded finance, before that, what it was, fintech was a challenger, and then fintechs were vendors. I mean, bleh, it's always a vocab nightmare. But I think BaaS and embedded finance to me is the next evolution of commercial banking, to your point. And I think that's the battleground. We're damn sure seeing it in the data. You guys at Pathward were kicking some serious ass. Do you want to talk a little bit about that sort of evolution and what you think that looks like?
Yeah, so I think the first thing everyone needs to do is stop thinking about everything in these weird business lines of the past, right? So I jokingly say that in 1984, Apple created the coolest commercial talking about the revolution of personal computing, and it's really the last time we ever updated banking cores. So it's just been the way it's been for so long. So we break everything into this issuing and it's acquiring, and then there's money movement, and we've always just talked about it as wires and ACH. And when you think about the FI rails, everything works in this very segmented approach. This is all lines of code. So the best way that I describe it is that what we deal with every single day is money is the product, right? We are dealing in a product that is money. The ability to move it, the ability to do it securely, safely, and quickly is the product that we are now working in. Well, pre these things showing up, you can't sell. Pre these things in COVID, that wasn't a very challenged thing, right? It went the way it went. It did it the way it did. Okay, well, that's not the way it is anymore. So we're moving money around, but we're not driving Brinks trucks to everybody's houses and dropping bags of cash off like it's the 1850 Western Unions anymore, right? We are literally working in a model now where data is the currency. So as quickly as you can move data, as fast as you can move data safely and securely, and with his least amount of infrastructure woes, the better and richer you are. So we have a currency crisis right now in a lot of the FIs that I think technology is trying to solve in an infrastructure that is not ready for it. And I think that's where you were seeing, I think the reason why you were seeing such a problem right now is that you have a regulatory environment that is working back in these days. You've had banks that have come out that are really tech houses that have bank charters that weren't protected from a reg tech perspective. So they're getting in all sorts of trouble. And then you have traditional FIs that want to be, tech focused, but don't have the technology. So they have all the regulatory, but they're still sending smoke signals to move data around. So we're just at this precipice of, we know it's time to change, but it's not going to be easy to change. And that's where players like Moov are saying like, hey, we're not going to be able to do this through these old modalities. So we're going to have to rebuild the house, take out the PVC piping, put in copper plumbing. And then once this is done, hey, expose your core to our API, connect into us, and we will show you how you can do this in one location. And by the way, sponsor it, custodiate, do all that stuff, custodiate it, do all that. But make it simple. So when someone says to me, embedded finance is too expensive, only the big guys can do it. Well, of course it is. If I got to go to 6 different solutions that each have their own bank on the backside, and I got to pay for every bank president's salary and every minimum and the only players that can do it are the people who can hire it in-house, build it all custom, right? And be able to handle all the extra liability and exposure. Once you take that away and you literally have banks that can go back to being a one-to-one again, the cost is going to drop. It's going to become more utilitarian, and we're just going to be able to move the data safely. It's really, and I say that all very flippantly because it's the math equation's there. Now it's the education, and it's actually people building it, and that's one of the number one reason why I jumped in with Moov is because for 5 years this is the direction I know it's going, and now we're actually building it, which is exciting.
Well, I tell you, man, as you watch these things evolve, there's compliance obviously right now has scared the hell out of everybody, and it's got a lot of players kind of backing off a little bit. And then there's others that are they're just slowing down and doing it a better way, which I think is great.
Listen.
And that is a super solvable solution. So that's just a case of enhance the compliance side on the bank, really pay attention to what's going on at the FinTech. Okay, but the bigger piece to this is this evolution that you're talking about. So it ultimately, instead of being 100%, let's say plug and play to the core, it's ancillary pieces, just like you would think of mobile or online as an ancillary piece, to the core. Payments and all the other pieces there become interesting. Now, where I have a bit of fear with this is that when we start talking about, hey, let's get rid of interchange. Well, that breaks the shit out of the model.
Yeah.
Now, can we get there eventually? I think that's a for sure.
Mm-hmm.
But can you do it overnight? I think you're going to need to rely on those pieces because of what we're saying. You've got a gateway, you've got a processor, you've got a network, you got everybody that's got to get paid along the way to provide these services, or there's no business model to make it work.
Yeah, and you're not going to have everyone paying, SaaS fees for every little thing along the way. I just don't see that, I don't see that as being very viable as well. Look, interchange going to be around 20 years from now? I don't know. Maybe not. I mean, but if it went away in the next couple of years, you'd have a graveyard of companies, right? And listen, that's the thing about, this isn't like an anti-government statement about to say, but that's the thing about people who are making regulations that aren't in the industry.
Yeah.
There's a lot of unintended consequences.
Yeah.
I mean, that's just
we talked about this so much that I don't want to call anybody a rookie, but when you're not in this space and you haven't been in this space for a very long time, it's really hard to understand all the parts and pieces. They have a tendency to look at an outcome,
Right.
It's kind of like the backlash right now in DEI and things like that. We look at an outcome and we think this would be a great outcome. How do we go about it? And sometimes how you go about it actually causes a whole other set of problems.
Absolutely.
And so there is a evolution that needs to take place here. And I do believe that that'll happen. And you're right, it's probably one of these days we'll not need interchange, but for now, it would be a mess.
1033 is a great example of this story to me. I mean, you look at that and I mean, you talk about just a ball of mess, right? That is a real,
Go wrong?
yeah, everything could go wrong,
Yeah.
right? So it's a messy time, man. I'm with
So
you.
really, this is a cool thing. I want to kind of go back to your background a little bit. I was in a meeting this week and they were talking about password and they kept calling it MetaBank over and over and over. And I was like, it's not called that anymore, right? Yeah. And so there was a huge volume that went through MetaBank at that point in time, government stimulus and other things like that. And so those rails are clearly still necessary. And I want to hear your thoughts about that. And also kind of how would you transition that model that we're talking about over to what Moov is trying to do?
Well, first of all, I mean, I'll take you one up one, right? Like paper checks are still a thing, right? We all got told 20 years ago that paper checks were the way of the dinosaur. Maybe, but in financial services, nothing goes the way of the dinosaur like a meteor hitting it. Like it takes time for things to die out. And here we are 20 years later, and I'm pretty sure Deluxe will tell you that a large part of their business is still, making you checks, and that service. So I think it's systemic, right? Everything is about the way people want to consume. And I think what we forget a lot of times in financial services is that we get very enthralled with ourselves and technology, but there's an end user, right? And the end user is the consumer. It's not the merchant. It's not the technology. It's the you and me as a consumer and how we want to consume. QR codes were going the way of the dinosaur as soon as they got created. And then COVID happened, right? And then they got a QR code on every table in every restaurant, right? So how you solve problems is great, but it has to be a direct reciprocant to how people want to consume the problem you're solving. So why do checks still exist? Because you know what? Someone asked me for that and I don't own checks. And thank God my wife is smart enough to, and she writes a check out. It's still a way that things get consumed. That's why they still exist, because it's still a modality. I think it's going to be a much faster shift because you have a new generation that has only ever grown up in technology. There's too much gray in here, guys. So as my kids now are in college, they've never known a world. My children have never known a world that didn't interact through an MPOS type solution, right? And really think that way. That's how they interact with the world. Even a credit card or a debit card, plastic in their hand. They don't even touch that unless somebody makes them touch it. So I think that there's just going to be a transition faster than has been before, but it's going to happen over time. That's why I just don't buy this whole 3 years, it's all gone. No, it's not, because you have right now, you have 5 generations living on this planet that all interact within financial services in different ways. So you're not just going to instantaneously take things away or make things obsolete. I do think though, it's going to accelerate at a much quicker speed than previous, just because of the way we interact with it today. So when we build solutions, and this is the way we talk about it a lot at Moov, we may be talking to PayFacs or ISVs or all those software providers that are doing it. But when we think about personas and we think about journeys, we're thinking about it through the lens of merchants and who the merchant does business with and how those things need to work and how those things need to happen from a commercial banking perspective to make it functional. And that's hard because, like you said, this isn't a complicated industry to understand, but it's incredibly nuanced. There's a lot of little things that the only way is if you've ran your head into that wall. And a lot of people, like when you talk about payments geniuses, it's like, well, we're not smarter than you. I just hit my head into that more times than you did, and now I know when to duck. Like that's all it is.
This is perfect because the bankers
I've made every mistake.
They outsource basically all of these functions from core to payments to all the rest of it. Their job is not to really thoroughly understand how it works. And so when people come along and go, hey, we got a solution. This is the problem and I say this to companies all the time. It's hard to sell into banks right now. Well, you shouldn't have lied to them so damn much. Okay. They don't really understand how this thing X's and O's all the way through.
Right.
And you tell them, hey, it's on the roadmap and it never comes, right? Okay. We've kind of created our own monster to a certain 100%. degree. Now You got people scared to death of compliance. And again, we created that monster as well, running out here and partnering up with fintechs that are, half baked in what we've tried to do. There is a way to do this. This is the good news. All right. This is a message of hope.
Yep.
That there is a way to do this that is big time compliance. There's banks out there that, they focus on compliance so hard. There's product solutions like what you guys are bringing to the table that make life easier, faster, better for everybody. And everyone can start participating and making more money along the way, including the banker.
100%. Well, and a lot of banks have gotten themselves because of that. A lot of banks have started paying themselves in the worst corner possible, which is we'll build it ourselves. You're not going to build it yourself. Like, you're just not. Like, there's a reason why you still only have the dozen bank core solutions out there that have been around for as long as they've been around for. It's very hard to do that stuff. I mean, it's not, if you had to build infrastructure from the ground up and you had to do it as a large organization, you're going to spend a lot more money than you ever thought possible to go do it. And that's the reason why they have it, right? So there are, like I said before, there are two types of banks that we've seen, right? We've seen a lot of banks focus on the technology, not the regulatory, and you're watching the backlash over the past last year, and this year is no different. We just had another one. We're going to have more consent orders flying. I don't think that's going to go away. And then you have those that are heavy regulatory banks that need to upgrade technology. Well, I said this when I was at Pathward. I'd much rather be in that boat because it's a lot easier to update reg tech than it is to build the knowledge and capabilities. One of the reasons why I love Pathward, and I still have a lot of friends there, even though I don't wear that logo on my chest, and I'm still bullish on Pathward, is they're perfectly positioned to go be the bridge between those two things. But that doesn't mean it's easy, right? That's still going to be hard even for them who want to go do it. And I think there's other banks like Pathward that are positioned because they have history, they have scale, they could make that pivot. But that's a sizable investment, especially for public banks. I mean, you're going to have to invest tens of millions of dollars to rebuild systems to move faster. And that just is going to take time. And not everybody is JP Morgan that can just go out and buy that stuff. So this is what I'm trying to say. It's going to be a blend of the right banks partnering with the right solution partners, working together to bring it to market. The difference is, and I'll just come back to it, is that the market isn't going to wait around forever. Consumers are going to push the change. So it's, even banks are going to, I'll say it this way. I sat in a meeting once where everyone was talking about some of these reg banks, these tech banks that are having problems as, oh, this is good. Yeah, look, like there's the warning. And I sat and listened. I said, that's the bellwether, guys. I said, because that means those guys now are going to go get investment because there's still dry powder out there for things that people know works. And they will go in and spend that money. And they will go build the regulatory. They'll go steal your best people, or they will go figure out, because by the way, if there's a rule, you can automate it, just fact. And they will go invest in regulation and go spend money to go steal away a OCC expert. By the way, our head of risk is from the OCC. They'll go steal that talent away from the government where the laws are made. They'll bring them into their companies. They'll build the reg tech. And in 2 years, they will have the technology and they will have the capability. And then you're what? So you're going to have to make these changes. It's coming. You don't got 3 to 5 years to sit around and pontificate. You're going to have to go make the changes. And that's okay because things change.
So you and I had a conversation that's really changed everything for me. And I had this conversation with Tanner, and we've had this like 100 times now about when you get good at creating embedded finance from the merchant side. All right, then the next obvious maneuver is let's go to all these businesses and do that. Right.
This is where I was heading too.
Go.
So Phil, what I was thinking about is let's just call it retail delivery, right? And I don't like the retail space, right, at all as a banker. I mean, I wouldn't put it this way. This is so simply stated. I would not want to be a credit union, right? You talk about bad areas of focus, right? Versus the real opportunity playing in the commercial banking side, right? And thinking about retail delivery, and I think the technology part of this is key, as is the reg. Brands, let's just call them brands, make it life real easy, right? Whether it's the Walmarts, the Home Depots, et cetera, Harley Davidson, whatever it might be. That damn sure seems to be the opportunity. And the question I've been asking for years, to your point, is how far downstream does that come? right? So obviously the large players, hey, I want to issue a debit card. I want to have a checking account, a savings account, line of credit, various things they want to do, early direct deposit. Cool.
Any business that has a lot of consumers that
Would
come to
love
them,
to be the bank.
when you can offer an embedded finance solution
Right.
there and create those customers' bank accounts.
So to me,
That's a distribution model for banking.
bingo. The key question though is how far downstream does that go to the mom and
Right,
pop? Does that go to the
right.
cupcake stand? And how long does it take to come down? How far it comes? Because I think that's the key question if I'm a community bank
Yeah.
with lots of small businesses. How long until I'm really under threat?
Right.
And my gut is roughly now. What do you think, Phil?
Yeah, I think so the answer is yes. I don't think that until the infrastructure model really cleans itself up, I think, because even the large brands are still, I wouldn't call this great in its current state. They can afford to do it because they can afford to put compliance people in house and pay, hundreds of $1,000s for payments experts, and they can do that in house, and they can have those direct connections. And the Walmarts of the world can go directly to Visa and negotiate direct interchange rates, and they can go directly to Coors, and they can do all that because it's Walmart, because they have such massive scale. They have negotiating power. That's the only players that I think can get the efficiency. I think the answer is, once the model is the way we've already described it, and this is one of those things where, and I'll challenge you on the credit unions. Here's why I'll challenge you. It's still an infrastructure play. No matter how you dice this in any way, it's all an infrastructure play. Once you clean up the infrastructure and make it easy for that connection to happen, well, then that could happen for a credit union that's a single branch with 5,000 members, or it could happen for a massive commercial institution. So, and the answer to that is, there will always be people for at least the next 20 to 30 years that want to walk into a bank, credit union, whatever, shake hands with Bob or Tim or Kim or whoever, and do business. And that's just the way people are raised, and that's the way it's going to be. So I don't think you take it away. I still think there is a play for those community players and to build it, but it's an infrastructure play. Now, I think the better question is how long does it take to streamline it for the large players? Because, hey man, just like the military creates something and then they take all that research and make it applicable for consumer consumption, right? For private consumption. This is no different. Like, you got to go to bigger players to get the money to build out the technology so that mom and pops can enjoy it. So how long is the time between that and that? I don't think it's measured in decades. I don't think it's measured in multiple years. I think it's something that happens in the next 3 to 5 years. I really do. I think it's something that you will see in the next 3 to 5 years. There's already brands trying to do this, by the way. If you look at like the Casasas of the world, a couple others that are trying to like say, hey, it's almost like, hey, buy this product. Anybody can resell this product in, and it's simulated. That's great. The problem is that what happens is that you're still going through like a sponsorship back-end model, and you're still adding in multiple hands. Well, when the day comes where the technology and the infrastructure is so easy to connect to that credit union can just say, hey, we want to offer this for our merchants or our businesses, and we can just literally connect into this infrastructure because it's simpler. Well, then it's done. Then you'll start seeing it where credit unions can if you have something that can process, program, manage for you on the backside, that credit union can make it in. They could throw out their own cards, create their own embedded play, allow them to connect into that. Can they do it today? Sure, but it's expensive and it's hard. Make it easy, and I don't see why. I always like to call it as, maybe not, maybe you get that cool mom and pop like coffee shop that figures it out. But here's the players that you'll see it get to faster. In every region, there is a brand that for anybody in the 100 miles around that region, everybody knows it. You go 100 miles and one away, they don't know what the hell you're talking about, right? But in that 100-mile region, they are like the kings of whatever they are. You'll see it come down to them first. And that's when you'll see a real change, is when it gets down to that level. That's when it's really making impact, because that means it's simpler to get to. They're not rich. They're not loaded.
I love having a banker that's a technology person.
Yes.
At the same time.
So we have me and him have what we call basically our Texas watch list of brands. So we watch HEB, we watch Home Depot, Whataburger, we watch Buc-ee's, right? And you're starting to see this stuff pop up a little bit, right? And they're getting a little more regional, to your point, right? Yeah. But it's coming downstream. I think I really liked your 3 to 5 year 5-year transformation timeline. I tend to agree, man. I think this is a lot quicker
Which
than
makes the
everybody
case that
expects.
this is not a time to sit on your ass.
Right.
Right.
Yeah.
And the fact that you look at somebody else that's, let's call it an OG, right? An old player in this market space, and they're under consent orders. They did it wrong. Okay.
They're going to be back in the ring.
Ding, ding, ding. Now throw the flag and we all can do the replay and go, what should have been, right? But they're starting out right now. You've got a unique opportunity to set up the infrastructure, the compliance teams. I mean, there's companies out there, it's already others that just didn't exist back then, right?
Well, and you've got the talking heads right now, all with this death of this space, right? And the regulatory means the regulators don't want this to happen. I'm like, it's the opposite. Clearly, this is maturity, right? And things are growing up. And clearly the regulatory side sees this as the future, to Phil's point.
And I'm going to tell you, if you're a banker and you set up an overly compliant system and you went ape shit, right? And you really overdid this a little bit, there's no penalty box for that.
Right.
No. Well, you know, can I tell you, I mean, the best thing I learned, because before I got to Pathward, to be honest with you, I mean, I worked in the acquiring side of the business. Money movement was ACH, or direct to debit was still coming up and everything like that. But that's where I've cut my teeth and I spent most of my time, right? So I came into Pathward and I didn't know what an MRA was. We didn't talk about that in acquiring. Like no one told you we're under MRA. Like we didn't know what that. You just like what? Terminal. So I was an integrated guy in that world, but still we didn't know that. So when I got there, when I say it was like a master's class in spending time, is I got a chance to talk to the OCC all the time. I got a chance to listen to FDIC. Like, you get to listen to these regulators and you read the rules and you have to get really involved in the law to know how to build things right. And here's the secret sauce of all of that. You know what the regulators want? There's laws that have to be followed, like minimum. You have to create programs that follow those laws, but also can operate. You have to be able to have standards to those laws. You have to be able to follow your standards. If you don't follow your standards, you have to be able to explain why. And essentially what regulators need to know is that you know how to protect your clients and how to manage it well. And to me, once I got in and I started having these conversations and I'm really in the mind of most of it, I'm like, well, this isn't that hard. Like the laws may be stupid, but I'm not here to litigate laws. That's why you hire people to go down to Washington and do that stuff. That's not my job. My job is to work within the law and to make it work for us, right? So that's technology. So once you understand something and there's a rule for something and you create a standard that everyone can get behind, that's a technological play. This isn't 1995 anymore. This isn't even 2005. This is 2024. Everything can be automated. And with AI, if you use AI right, outside of just making ChatGPT bots, the data comes in. You can create intelligent models on the backside that gives you everything you need from fraud perspective, from watches, for how to apply things, to how to transactionally move things better. That's what all of this will be. It's why so many people are jazzed about AI. So to me, this is all things that make sense. Now, the human element is that you don't know when the next senator is going to want to get their name in a bill and start conversations on stuff. But guys, that's the way it was when Durbin came out with the First Amendment, right? When the Durbin Amendment came out and you read this rule and all these things were going to make stuff better, did it? Well, I can tell you in the acquiring space, there was no rule that said that I had to charge everybody, 5 bips and 22 cents. That wasn't a thing. So what did all those guys do? They just made more money. That was an unintended consequence of not understanding how the systematic play is. But everything else was rules-based. So it's always been, in my mind's eye, a technology play once you understand the rules. So what I tell, and I'm very big on this, is that I live on the doorstep of aggressive and conservative. I'm always going to drive to the next market. Emerging markets don't scare me. Hard things don't scare me. But you don't be stupid. You don't just go do a thing. You come to the table, you understand what the concerns are, what the true risks are. You mitigate 90%, 95% of the risk. You deal with the 5% outliers. You build your system for 95% of what you know is going to happen. And if you can do that, which I know we can because we've done it before, these conversations, they'll just change, right? Let's be honest. Let's be very candid. In this industry, we just recycle the same crap and call it something different, right? I mean, that's all we do. We literally every 10 years, we come up with an old problem, call it something new, and then walk around and say, oh, now we have something to talk about for 2 years. But at the end of the day, it's the same stuff, dude.
Transformation.
Yes.
Right. Yeah.
I used to call it online banking. Right?
Yeah. Right.
Right. Correct.
Man,
Yeah.
I love it. Super awesome breakdown. I want to give you a second though. Final thoughts on anything that you want, man. I know we've covered a hell of a lot of ground, and we're
The Super Bowl.
obviously the three of us are on the same page and thinking the same way. And we're all a little bit frustrated, I think, that everybody else isn't catching up and having the right conversations, right? But Phil, anything on your mind whatsoever? We had one time Pete Glyman talked about throwing pumpkins out of an airplane.
That was pretty
That
cool.
was pretty
That
cool.
was pretty cool.
But any topic, man, it could be banking, it could be anything you want. But final thoughts, man, whatever's on
I
your
mean,
mind.
I'll just leave it like this. One of the things that I hope to do over the next year or two is any opportunity for us to get in and educate and talk about the future to me is really important. And I don't want to just talk about it from ones and zeros on a technology sense. I want to talk about it from a human element. We are literally here. I always get a kick out of we call it financial services because that's what we put on cards. But the services is the key thing. We are here to serve. And at the end of the day, all of us that are technologists, or all of us that are bankers, or all of us that are, or whatever our titles are in there, we are also at the end of the day the same people that have family that don't understand what we do, and we're making it for them, and we're making it for the people in our communities. The more that we can make everything accessible, the better we are as a country. And that has always been the case. When you make the playing field as equal as you can, we have always been better. So I think the education on this is, I know this is scary or complicated. It doesn't have to be. It doesn't mean it's easy, but there is a play here. And I think the more that the community can come together and talk about the things that scare us, they become less scary. And then we can get to this a lot better, and we don't have to worry about it. And by the way, I just want to say this. That's what every person who wears the hat of a regulator wants, who, by the way, are still your cousins, sisters, brothers, uncles, whatever. They're still humans. They don't want to be bad. They don't want bad actors in the space. They don't want, grandma's pension to go away or the money to get disappeared. Nobody wants that. So I feel like from an education standpoint, the faster we can come together and the faster we can all talk the same vernacular together, this gets done. So I look forward to trying to be a voice in that as we're out building.
But we are. We agree. Yes, you are. Man, I appreciate it. This was an awesome conversation. Thanks so much for coming. Good luck with Moov. I know you and Wade are going to have a blast. I'm a little bit jealous.
Don't you in the arm for me?
Yeah, man, that's going to be a great thing. And I know I've gotten to watch a lot of the evolution of Moov and everything you guys are working on. So really, really exciting stuff, man.
Thanks, man. Appreciate it. And thanks so much for
We
having me.
together all the time. I'll bring you along on some of these and let you kind of sit down and just answer questions with people and walk through things. I think the details are important.
Yeah, and anytime. Always welcome. I love it. Thank you so much.
Thank you, Phil.
Thanks a bunch, man. We'll catch you next time.
Yeah, buddy. Talk soon.